Welcome to Drill Down Earnings. We have a quarterly report from Lattice Semiconductor. This is the business story behind one stock on the move, one of the 50 most important companies in technology. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. So we look at Lattice Semiconductor and we finally see a turnaround in this company that's selling chips to cars, which is interesting because we had On Semiconductor earlier today, which did not see a turnaround, and it's also selling chips to cars. So what's the difference in the automotive sector? Part of it's the focus on EVs for On Semiconductor and all cars for Lattice Semiconductor. But let's dig into this a little bit deeper here. So if you just look at kind of top line numbers, $117.4 million in the quarter, 15 cents per share. Again, a much smaller company than On Semiconductor, but things not great. I mean, revenue's down 31% on a year-over-year basis. That's just not good. This company makes what's called FPGAs, field programmable logic. Programmable logic is chips that you can kind of, you ship them and then the company that's using them figures out how to program them. That's very a gross generalization, but that's what field programmable logic is. And it's an interesting sector in technology because these chips are very versatile, almost by definition, but it also means your customers can order a lot of them when they don't need them if they're worried about supply chain, which we all were 4 years ago with the pandemic, 5 years ago with the pandemic. And it was a really scary time for semiconductor makers because you're selling a lot of chips, but you don't know if your customers are really using them. And of course, as my friend Dan Niles likes to say, when you sell semiconductors, your customers lie to you. All the semiconductor companies say that's not true, but it's true. The companies order more than they need. So we look at, they're selling into communications, they're selling into industrial, they're selling into consumer. Sorry, that's the sound of my pacemaker. I get so excited when I talk about Lattice Semiconductor. It's gonna get better any second now. So inventory, that's the thing we worry about here. And inventory days were ballooning and they're still up on a year-over-year basis, 18%, with revenues down 34%. When inventory is up, revenue's down for those companies because they don't need to sell stuff. But it's getting a little bit better. The days of inventory is down from what it was last quarter. I think it's reasonable. I measure these things on a year-over-year basis because there is some seasonality in the build-out of these companies, both in communications and in automobiles. And yet, on a sequential basis, you can see the numbers come down in total days of inventory. And so while there's no let-up in sight for the slowdown, maybe there's good news that maybe some of the business communications down only 1%. It's down, but a little bit better than it had been. Industrial and automotive down 51% on a year-over-year basis, and the rest of their business down 16%. When you look at what happened to the stock, though, the suggestion that inventory is getting a little bit better was seen as a very big positive for this company, and the stock rallied 12% in after-hours trading after being down 22% in the last year. So here's what the new CEO of Lattice Semiconductor, I should point out, Ford Tarner, I should say, had to say about what's going on, where the progress is, and kind of the three big reasons for that progress.
Number one, the channel inventory, we're making progress as expected. We do expect to continue to glide down inventory as we previously discussed to get to regular inventory level by mid-year 2025. So that's probably factor number one. Factor number two, if you compare this against the backdrop of other companies in our sector that are guiding down, we do believe we're taking share in our markets. So we are encouraged by the continued design wins on our Nexus, Avant, and new product lines, and continue to take share. And number three, we have seen improvements across our industrial, automotive, as well as the communication sectors. Computing's always been strong, continue to be strong, but we're seeing recovery in the other segments as well.
So three reasons for improvement, they'll take it at Lattice Semiconductor. What's the one number that tells us a whole lot? What's your summary? What do you want to remember about this Lattice quarter? Well, I'll give it to you. Q4 earnings from Lattice Semiconductor, here's your essential summary. So $117 million, $117.4 million in top line revenues. Top line revenues is redundant, but anyway, that's down 31%, that stinks. But some things are starting to get better, most importantly, days of inventory, and that's the number I want you to remember. Days of inventory was down from almost 250 days of inventory to 207 days of inventory at the company. That means customers' inventories are down even more. It's a good sign and hopeful for Lattice Semiconductor. Thanks for checking out Drill Down Earnings. I'm Cory Johnson.